Welcome back. You're watching us here on Bazaar Morning Call. The Gift Nifty down about 35 points or indicating a 35-point lower start. 45 points now. Let's see whether that dip gets bought into or not. Similar to the kind of gain that we saw yesterday, maybe we open flat as compared to the open. Dharmesh Kant, who's the head of research at Chola Securities, now joins us. Dharmesh, what do you make of the Trent numbers that came over after markets yesterday? The stock was up 5% ahead of numbers.
Yeah, good morning, Mangalam. Thanks for having me for the show. See, the stock was definitely up 5% in anticipation of some good numbers coming through, but overall, revenue growth of around 15-16%, mid-teens kind of revenue growth was there. There was definitely a margin uptick in the Trent numbers, but going by what is the new norm for Trent to deliver, for times to come would be around 15 to 20% at best they can do. The valuation multiples of Trent was, given on the basis of at least, 35, 40% kind of a growth rate. So from there, there's been significant drop, and this is, 2-3 quarters of consecutive decline in the top line growth. So I think trading bounce can still happen, but the valuation comfort is not there, and this will be the new norm for the numbers going forward. Based on that, I don't think it's still a fundamental buy because valuations are still very expensive, way ahead of the growth rate which is about to come for this company. So trading pair can be on, but as far as fundamental, long-term buy is concerned, it should be avoided.
All right, a trading bet is on, but not necessarily a fundamental up move. The stock last checked was close to around 70 times one-year forward price to earnings in terms of valuations. What about the IT pack? The rout continued yesterday and overnight on NASDAQ as well. Do you think it continues today? At what point does it become a value pick?
Yeah, Mangalam, the problem with Indian IT space is we are always left catching up or replicating what the world has to offer. I mean, this Anthropic was, established in 2021. In 4 years time frame, they can come out with products which can disrupt the entire ecosystem of the IT world globally, including the, big weights in the US market. We have a history of more than 30 years in the IT servicing part, and still we end up managing the back end of the system. And what is the growth level? I mean, 4-5% kind of growth in IR terms we are talking about. And if there is a 50 basis point or 100 basis point kind of an improvement in guidance, we are celebrating that. If you take the currency advantage away, the currency depreciation which India is having, this will come down to 1 and 2%, or it can be even a negative kind of a scenario. So to my mind, unless Indian IT companies come out with this disruptive kind of a product, which the world is there to be, for the taking, it won't change the scenario out here. We can talk about sequential trading place in there, but large caps to be totally avoided. Software as a service is into a question mark now, but product companies can still merit a chance. So one has to focus on Indian IT product companies because product is what will be the newest technology and the advantage will come through from those companies. So we are completely avoiding the IT companies except Orient Pro Solution, which we have a recommendation on. The earnings came through yesterday. Earnings was operationally, the earnings was pretty good. If you look at sequentially, there was improvement of, revenue was 3.74% up, EBITDA was 4.7% up, and EBIT was 5.96% up, with margins improving, EBITDA improving by 20 basis point, EBIT by 70 basis point. Top line on a year-on-year basis, revenue growth was 21%, slightly lower than the management on guidance, and they have guided for 30% kind of a growth for entire FY26. 9 months they have done 26%, and the reason for this kind of a slowdown in Q3 mainly was maximum order wins came in the month of December and November, which will be executed in Q4 and Q1 of next financial year. So around 6 order wins were there, 4 from banking space, 2 from mobility space, and almost 400 to 450 crores of the size of the order book has been there. Normally they do 12 to 15% kind of a execution in the quarter. So I think Q4 is likely to be better. And data center order win has been there from the IDBI bank. That happened a few days back. Though it's a small size, 20 odd crores roundabout. But I think this opens up the opportunity for further opportunities coming in the data center space. So management, will be doing a phone call today evening. We will be focusing keenly, watching that and discussing out there. Let's see what they have to guide. But I think they will do near to what they have guided for FY, by the time we end FY26. Again, I mean, in such an environment, it's a good growth numbers which has come through.
Okay. In the past, you like Persistent and Coforge. that's out of the portfolio now?
Yeah, seeing the kind of development which is happening and which will happen, definitely, I mean, near term, there won't be any impact on any of the profitability of any of the IT companies. They would be going with a steady state what they have given. But definitely, as things improve and the type of disruption is happening, so India needs to have some deep sea or Anthropic kind of a companies out there. Otherwise, so, I mean, normal maintenance will definitely come under cloud going forward, and this is what we have seen. So that's definitely out of our kitty now.
Dharmesh, the last time we spoke, you said in the entire defense pack, Hindustan Aeronautics is a stock that you like. Valuations relatively were attractive at 30 times forward multiple. Now, just yesterday, there was news about how the company is out of the race to manufacture those stealther jets. So it's a potential order loss of 15,000 crore rupees. Not significant when you look at the overall order book size, but the stock was under pressure. And today, Morgan Stanley has downgraded HAL, and they're citing increased competition from private players. What is the view on HAL? Have you spoken to the company? What's the call?
No, we have not spoken to the company. The reason being the numbers are yet to be out and they are in a silent period. Once the numbers come through, then maybe an interaction will happen. I mean, fundamentally on the numbers front, they are sitting at around 8x their book-to-bill ratio. So ample of visibility of 15-20% kind of a growth going forward for next 3 to 4 years. No problem out there. At the same time, the execution was delayed because of not their fault, but because of the fault of, I mean, GE was not supplying the aircraft engines, fighter plane engines. So that's the reason why the execution has come under a bit of a problem. And the government of India has, now came out with a new rule where you can't have an order book in excess of 3 times book-to-bill ratio. So many of this, not only HL, there are other companies like B and all, they all will have face the same problem when incremental defense orders are being announced. I mean, what Morgan Stanley has cited sentimentally, yes, definitely, because the private players, all three private players, be it Tata or Bharat Forge or L&T coming, they are coming through an indirect route by having a tie-up with defense companies. And this will open up the competition. So, I mean, now the thing is very clear. You have to execute and it's good. There's no monopoly. There will be many competitors in the race. And that has a, sentimentally negative impact. But seeing the valuation multiples in which HL is standing and the type of book size they are there, and if they are able to demonstrate execution capability in, say, Q4 and Q1 of FY27, it will be back in the reckoning and business. So we have advised our clients to stay put. In fact, we have advised to add HL in yesterday's fall.
Okay, advice to add HAL in yesterday's fall. Dharmesh, thank you very much for joining in.